Hello, everyone, and welcome to the Ventures podcast. I'm excited about this episode with Veronica Sagastume. She is a startup finance and accounting expert. Her group, Fortified Accounting, covers everything that you would need in the early stage and growing finance department of your business, from the bookkeeping to payroll to all the payables and receivables to the strategy that often a chief finance officer, a CFO, would help you with. So if you think about fractional CFO type work, her firm does everything in between. And so she's very gracious, and we do a lot of in-depth educational conversation in this episode. We talk about the books, what statements of cash flow, the P&L, and the balance sheet are, why it's important to get those in place on the very beginning of the month as soon as possible, so that you can put them side by side with your projections, your financial model, your pro forma. This is very critical for your ability to run your business. And so I'm delighted that we covered all this material, and this is a crash course in all things startup accounting and finance. So if you're watching, you can also listen anywhere that you get your podcasts. You can just search for Ventures and it should show up. And if you're listening, you can also watch by visiting wclittle.com, and there I'll have more extensive show notes and links to the different things that we talk about today. With that, please enjoy this conversation with Veronica. I'm so excited that we captured all this to be able to share with you. All right, Veronica, welcome to the show.
Hey, Will, thank you for having me. I'm excited to be here.
So the audience listening in, most people listen, some watch. They are entrepreneurs, they're venture builders, they'll have a day job, and they're thinking about what to do with their free time, thinking about how to build a business, the transition between day job to jumping in full time. And so I'm excited about this conversation because we don't have a lot of conversations on this show about all things accounting and finance in startups. Now, this is actually a super important and exciting topic. So all of you out there rolling your eyes, this is not this is not the time to do that. Would you mind?
Sexy topic. It's a sexy topic.
Would you, Veronica, would you mind just telling us a little bit about your background and kind of what you do?
Absolutely, thank you. Like most corporate entrepreneurs, I have a very traditional background. I went to college, got an accounting finance degree, and I ventured into the corporate world. I did not go the CPA firm route. We toured and I saw how unhappy people looked. And so I went the private route. And early in my career, I got recruited by Fortune 500 companies. And I worked for a few of those. In the midst of all of that, I got an opportunity to do something very part-time with these two co-founders in what is known as the Silicon Valley. I did not know that at the time. I think that at that time was ignorance is bliss. I knew that I wanted to be part of something cool, but I didn't know what that was. And that early stage startup was my introduction to that startup world in the Silicon Valley. And it was originally two co-founders with two employees. And that was my introduction into the startup world, which ultimately went public. We went public within 17, 18 months of me joining them. So it was a very fast and furious time of hiring, growing, implementing. And that is one of the first times that I ever heard the saying, which is fail fast and fail often, because that's how we fix things, and we ran with it. And that was I didn't know it at the time, but that would be my introduction to this industry that I loved, which is the startup world. But then I got introduced into e-commerce startups, biotech startups, financial services. So I dabbled in a lot of different models until I found that my love was with technology and that fast moving startup world, as well as accounting and finance and operations. So I spent 20 years, and I literally left my corner office in San Francisco in 2010 and traded it for my home office. I decided to just I wanted something new, something different. I had some life events with family members that I felt I needed to spend more time with. And I'm so grateful that I had that self-awareness to realize it was my grandmother. My grandmother was getting much older and I wanted to spend more time with her. And I felt that becoming a consultant, a CFO consultant, um, would serve me well and allow me the flexibility to be able to spend time with her and go with her to different meetings and appointments and just be around with her more and more. And so that was the beginning of my entrepreneurship, um, leaving behind the corporate world, but still serving that early stage or startup community that I love so much.
Mm.
And that's where I'm at today. I went from a consultant to then growing a firm, which is what we have now. And we serve early stage startups. And we had to define early stage startups that are funded. It doesn't matter how they're funded, but a lot of people who start a business think that they're a startup, but it's just a different terminology, right?
Right, right. So, okay. So last 15 years, I've been helping startups and funding startups and incubating a bunch of them myself, working with co-founders, working with entrepreneurs that have the dream, that have the aspiration. And no matter the revenue model, it typically gets to the point. And unfortunately, the finances and financial model and how to think about uh, controller, how to think about bookkeeper, which I'd love to
Mhm.
spend some time even just diving into the terminology in the space for those that aren't familiar.
Sure.
Um, that's usually an afterthought. It's usually, oh, who do I know that is, what accounting firm, or what's the difference between an accountant and a bookkeeper? What's the difference between an accountant and a CPA? There's just usually a lot of questions if people don't come
Hmm.
from finance backgrounds. What's the I just threw out a bunch of terms. What's the kind of 101 advice that you have for educating founders on this in this space if they don't have the background? And at what point do you really need to bring in help?
It's such a great question, and it is one of those mostly an often asked question because, yeah, there's not a lot of education in terms of people think that they can just hire a bookkeeper to help them to keep the books. But early stage startups need, yes, the day to day is a bookkeeper, tracking the expenses, coding them, making sure that they reconcile the bank account. That is an essential baseline foundational thing that they need to hire for. But oftentimes, a startup or co-founders or founders think that just hiring a bookkeeper is enough, but a bookkeeper only can go so far
Yeah.
on the day-to-day transactions. You need then the next level is you have like a bookkeeper, then you have an accountant who can really look to see what accounts are going on, that know GAAP accounting, that are recording transactions so they are compliant. So when there comes tax time or a financial review, the books are solid. They are on a solid foundation and like what we like to call steel, stainless, not stainless steel, like steel books, like they are really, really solid. And then there's the controller who is overseeing the actual performance of the financial activity, the health of the
Mhm.
company's finances, right? They're looking to analyze, are they on track? Are they performing according to budget? Are they meeting those metrics that are measured? Whether it's, there's different measures at different stages of a startup, but early on, cash is king. So early on, that controller is making sure that they are looking ahead while also looking back and helping the founders to translate the financial data. So you've got the bookkeeper who deals with the day to day paying bills, processing payroll, invoicing, making sure they're doing collections. You got the accountants who are making sure that the entries are being recorded correctly according to a GAAP so that they're always the company doesn't need to worry about compliance issues later on. The controllers analyzing the data and translating that data, and then also introducing reporting, consistent reporting, timely, consistent reporting, so that they are able to measure the performance and adjust accordingly. Like I go back to that saying of like fail fast and fail often. They can see how something that they're doing or have introduced is performing, as opposed to waiting until 6 months when they're like, oh my God, we haven't had our books reconciled and we don't know. And they hire someone, it's rushed. We have to get ready for a tax return and or for some sort of event that they need
Mhm.
reporting for. And now they're for the first time seeing, but we thought we were doing great. Yes, but GAAP accounting is tricky sometimes, so, or other things that are very directly related to revenue recognition. And that's where the CFO role comes in. The CFO is the one that's helping the co-founders, or I keep saying co-founders because I was just on a call with 3 co-founders. So sorry, but that's the CFO is someone who helps the founders to build that financial model, which is also called a pro forma forecast. They all have a slightly different function, but the ultimate goal is, hey, translate our vision into numbers, translate our goals into numbers. And so the CFO's role is to meet with the founders, meet with even the investors or the board of directors, and discuss what the goals are. And it's almost like you work backwards. You work with the end in mind. Oh, we want to have this many sales. Okay. What is the cost? What is the revenue? What is the pricing? Who do we need? You work backwards in building that pro forma model, which then is given to the controller or the accountant to either upload into the accounting system or to measure actual performance against the pro forma or the budget or forecast. So you have very distinct roles, and oftentimes an early stage startup hires a CFO before they hire, or excuse me, they hire a bookkeeper thinking that the bookkeeper can do the accounting and the controller and the CFO stuff. And the bookkeeper often wants to, they're awesome. They're the backbone of the day-to-day transactions, but they also don't often say no, or that's outside of my area of expertise.
Right.
And they get into trouble. And that's where my firm has been hired so many times to, hey, we know something's not right, not quite sure because we don't even know what to ask. Can you take a look? And we always say they've done as much as they can, but you started to ask more of them and they couldn't do it. And they didn't know how to say no when they needed to hire experts for different stages. Not one person can do it all, and they shouldn't. In accounting, you need those checks and balances, and different areas of expertise require different experts.
So I'm putting myself in the shoes of a early stage founder that has some traction, things are cooking, revenue's coming in, and has now listened to the last 5 minutes of this conversation and are very, very overwhelmed.
Sorry.
because we talked about, no, this is good because it's why we have it recorded. You can go back and listen to the last 5 minutes, but I want to ask some specific questions. We talked about the controller, we talked about the bookkeeper, you talked about the accounting, you talked about the CFO stuff, right? The quote unquote CFO stuff. Mm-hmm. I want to dive into each of those in sequence, and we can go through pretty quickly. But one thing before we get there, you said GAAP accounting multiple times. For those that aren't familiar with GAAP accounting, can you define that? Can you let founders know listening in why that sort of compliance is super important?
Sure. And it stands for generally accepted accounting principles. That's GAAP accounting. And I don't watch football all the time, but I've often referred or made a reference to my founders to say it's like the playbook. It's like all those rules that you have to follow when you're executing some sort of play. You have to follow the rules, and the rules are constantly changing. And especially in the United States, I don't pretend to know accounting in other countries, but in the United States, there are really strict regulations. And if you don't know that there are these rules and principles that need to be followed and represented in your financials, you could get into trouble that may be impactful when it comes to tax time or an exit strategy or some sort of event that requires you to supply financials. And so GAAP accounting is the rule book for accountants to follow when it comes to revenue, recognizing revenue, or following how to expense certain costs and fees. And yeah, it's just the rule book.
So if an entrepreneur out there is just trying to wing it, and maybe they have Xero or maybe they have QuickBooks Online or something like that, will those programs give them what they need in terms of the basics, or are they just going to be running into trouble and they should hire somebody quickly?
Yeah. So Xero and QuickBooks Online have a place in the market for sure. They allow you to very easily download your cash transactions and code them. But it requires an accountant or some sort of accounting experience and knowledge to know how to treat certain things. Can I give you an example, Will? Because I think maybe, so let's say you purchased a piece of equipment that was $25,000. Most people would just record the transaction to take the money out of cash because they paid for it and code the expense maybe to the profit and loss statement as computer equipment expense. that's one way to do it. It's not the right way to do it.
Yeah.
It's there's an accounting way to treat that, which requires knowing that it's an asset that goes on the balance sheet, and then you expense it over a period of time that's mandated by the IRS. That then hits a portion of that cost over time on the profit and loss statement. A lot of bookkeepers know about that, and they can guide the owner or the founder about that. Oftentimes the founders are trying to do the books themselves until they feel like they have traction revenue coming in and can justify hiring someone else. And what I say to that is, you can hire a bookkeeper to at the very least record your transactions early on, and then when you feel like you can afford it, hire an accountant to help you to analyze the books and see what needs to be done to get them to be up to code, so to speak. And in doing so, they need to just know that they're either going to pay for it now or pay for it later. When they pay for it later, because something is wrong, it will require more time. It will be more expensive because now you're having to pay to go back and fix the books and get them cleaned up, get them up to code, and then adopt a new way of doing it. And so that's one of those areas of a lot of founders think of accounting, bookkeeping, finance, operations as an expense, as opposed to thinking that we're here to keep you, to save you money, to save you time, and to keep you, I keep using the word compliant, but basically it's to keep you on the right side of the rule book.
Yeah. No, that's good. Okay. So then diving into to what we talked about, and let's do it in the order of how you would recommend the hire. So let's say we're founders of a B2B SaaS company. Maybe we have some consumer revenue freemium model. A lot of revenue coming in. We've been doing the books ourselves. And in the early stages, what's the first hire? Sounds like the first hire might be a bookkeeper.
So you'll be surprised about my recommendation, but I would
Okay.
say I would not hire the person. I would hire some sort of firm or agency or business that has those different levels that can grow with the early stage startup. Because when you hire someone, that one person, now you're, whether you hire them as the one consultant or you hire them as an employee, now you're just with that one person who can only take you to a certain level, and you're going to be looking for someone else at the next stage and the next stage. Whereas if you look around for whether it's a firm, agency, we go by different names, that can have the bookkeeping arm, and then maybe have a quarterly meeting, and then that firm or the accounting practice then can recommend, hey, you're getting to this point and maybe time for you to introduce this level of professional, but you're still under that same agency or the same practice that knows your business, knows your books, knows your goals, the exit strategy that you have, or the business growth. And so that firm usually will have the different levels of expertise that an early stage startup needs, without the early stage startup having to hire that person and then not knowing, is this the right person or not? Whether it's like, if you go with an agency, they can say, this is not a good fit, do you have somebody else that can handle our things? Or what we get often is, hey, is there someone on your team who can help us we're going to this conference and we want to present this financial model. Do you have someone on your team that can help us? Well, they still have their ongoing monthly bookkeeper who's handling that, but a different person with the right expertise, still knowing the books and knowing all of their, again, their strategy and, the goals of the business, can now step in and look at what we have, the access that we have to their books, because of the bookkeeping side of the business, and we can easily extrapolate and start creating that pro forma for them. And so there's such a pro and con to everything, right? There's a pro to hiring that person who's going to be dedicated, to you, to your books. But in a firm, usually will have very dedicated people with the right expertise to handle your books as well. So my recommendation would be, the early stage startups, go with a firm or a practice that has those different areas of expertise that can grow with you as you need it. And when you don't, then you don't.
Yeah, that's smart. I was thinking it's almost analogous to somebody who's doing a huge remodel or a huge construction project. Yes, you can go hire all these individual subcontractors yourself, and maybe you can think about the design and compliance, et cetera, et cetera, et cetera. But if you could get the proper firm, the proper general contractor, architect team that can do that for you and grow with you. Now, obviously, expense is key. So,
Yes.
entrepreneurs listening in, the aim of the game is to build your company and get your traction. That famous, infamous one word traction, uh, high enough so that you can justify raising enough money in order to
Hmm.
hire a firm to execute what you need to execute.
Exactly. Traction. I mean, it's just, we go back, it's the cash. You got to get the cash and you got to show the proof of concept. You got to show that there is a market. You got to show that people are willing to pay that pricing. And while you're doing that, though, you're still are trying to build the business in the back end. And part of what we introduce as a firm is to these words get thrown out: systematize, standardize. But there is something to that, because time is money. And so when you're hiring a firm, and by the way, Will, I'm going to use that general contractor example. May I steal it?
Please do, please do. Yeah.
I'm taking it. It's better than the sports analogy, which I get wrong all the time. Okay, so, but yeah, there's when we systematize, and by that I mean, we have a tech stack in my business that we use and that we offer. And so by having a very the tech stack that we use over and over, we become experts. We're really fast at that.
Yeah,
We
yeah,
can onboard quickly. We
yeah.
know the pitfalls. We're not learning on the job. We've already been there, done that. And so part of the fee is not only just to keep the books. It's also, you're paying for the strategy of the guide, the recommendations, the food for thought. Here's what you may be doing. We recently did an analysis for a client, and we were able to give them two other suggestions as to how they could go with a different service provider, get a better service, better outcome, and save almost $15,000 overall. So that is the kind of thing that when you are hiring an agency or an accounting practice or some sort of other business that can offer you these different areas of expertise, it is expertise. It's also connections. It's also, saving you time, saving you money by letting you know, this was good that you started with these systems. Now it's time to look at something else because we think there's savings. So we're not just recording a transaction or spitting out financial
Yeah.
statements based on the transactions. We're also giving that we know how important the traction is. We know how important it is to preserve as much cash as long as possible, to give them that runway to get to market and start hitting those key points, those key metrics that the board and the investors really drive, that they make their decisions as to whether this is a viable company, a good product, a good market, a good investment.
This is good. I'm glad we're having this conversation because, yeah, 15 years ago, I would have been like, oh, you can hire all these people yourself and save a bunch of money and, everybody can win. 15 years later,
Mhm.
I'm like, no, 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 no. Go with the firm that you can grow.
Yeah.
I probably haven't solidified my thoughts until just now based on your recommendations, but this is it. If you can do it, do it. And if you have to hire maybe a smaller firm rather than the
Hmm.
larger firm, go with
Hmm.
that, because that you
Exactly.
can help save some money there. Okay. So I hark all the time with entrepreneurs I work with on a monthly rhythm: get your books from your bookkeeper. So the bookkeeper's job is just you're looking at an income statement, statement of cash flows, and a balance sheet. Those three. Do you want,
Hmm.
actually, from an education standpoint, you want to just talk about briefly what are those three and why those are important to see monthly?
Sure. The balance sheet is a great snapshot of not only the health of your business, but it shows you your assets. Like, what do you have that is worth something of value? Cash is one of them. Maybe people who owe you money, that's your receivables. That's basically very liquid cash because it's going to come in 30, 60, 90 days. So
Hopefully, hopefully.
those things, right, hopefully. If not, there's things in place that we can do to,
There you go.
that's yet another recommendation, right, of how
Yeah,
to ensure that that money comes in timely.
yeah.
But so the balance sheet represents the assets, the tangible things that you have, the worth, the value based on cash, accounts receivable, but also things that if you needed to liquidate the company, what else do you have in assets? That's your fixed assets. The second portion of your balance sheet is, what do you owe? Not only short term, but maybe you have a loan on the books that, if you were to liquidate your company today, what do you need to pay off and pay out in order to make everybody happy and be debt free. And so when we look at a balance sheet, when an investor looks at a balance sheet, when a founder looks at a balance sheet, they're constantly looking to see, hopefully the value of the top portion is higher than the debt, the assets, and the liquid cash is higher than what they owe.
Mm.
Oftentimes it's upside down for a long period of time early on. But then in the very bottom of the portion of the balance sheet, you're looking to see what comes in from the profit and loss statement. It's cumulative. It's basically, are we profitable, or is there an ongoing net operating loss? And that amount, for a long time, for early stage startups, that amount it grows in a negative way, meaning that they're incurring losses month over month until the traction is high enough that they become profitable. So the balance sheet is more of like a report card of how valuable is your company after you pay off all the debt. How much do you owe? How much do you actually have? The profit and loss statement is more of like the financial performance on a monthly basis plus year to date of what is your company doing? And are you selling your product, your services more than the expenses that you're incurring? In early stage startups, oftentimes not. Your early stage financial statement, especially the profit and loss statement, is your biggest cost is usually R&D, research and development, or wages, your payroll, because you're having to hire people to build the business. And so as long as you know what your financials are looking like, what they should be looking like, and then what to look for in order to, continue to make decisions and build a company, your profit and loss statement is such a valuable piece of information to see month over month. I don't like standalone months. I like month over month, or running month to the year to date, so you can see the trends. Oftentimes revenue depends on the business model, the product. The revenue could have peaks and valleys, and so the monthly revenue is distorted. It doesn't look right. But if you do a year to date or a running monthly, you can see, oh, okay, I'm doing okay. Let's just focus on the year to date amounts. No one likes a statement of cash flows. No one can read that. No one can read that statement. We've developed what we call it a cash burn. We just reformat that statement of cash flow so that people understand what money came in, what money came out, and how much money do I have at the end of the month. And the statement of cash flow is supposed to do that. And it's a little difficult to read. So that's when you need somebody like myself to translate it and be like, the reason is because, more receivables came in, more payables were paid out, we bought more fixed assets. And so, but you need those three statements because each one of them gives you a different side of the picture. To get an overall picture, you need those three financials on a monthly basis and in a timely manner.
Yes.
That drives me crazy when I hear people saying, oh, it's the third week of the month and we still haven't received our financials. When you systematize and you standardize the processes, you should be able to close up the books within 3 to 5 days, generate financials, and even do a little write-up of analysis. That's what I think anyway.
Okay, you heard that here, folks. I've worked with so many different firms over the years. That is rare. If you actually can pull that off and have a group that does that, hire them immediately, which we'll get to. I'm happy to pump your firm because you're educating us
Thank you.
Big time. All right. I was just thinking, like, those are actually great clips. So we will share those clips as we go around those three. Cause most founders who don't come from a finance background have no idea why that's important. So anyway, I hark on founders. Yes. Get those three statements as quickly as possible at the beginning of the month and reconciling them with your financial model. I don't know if reconcile is the right word, but it's basically put in the historicals in the month to month from your financial model, so you can tweak all your assumptions. So you're like, oh, is this assumption about how much we're spending on ad, on social media, et cetera, and you can tweak those assumptions, and then you have your historicals, and then you have your projections. I like to see it in one document. About 5-6 years ago, my buddy Troy Hennikov and I wrote a startup financial modeling series. And we basically said, if you can, it's really great to build your first early one yourself, just so you understand sheet by sheet, row by row, column by column, how
Exactly.
your business works. And that can give you a lot of power and a lot of insight. It's almost like you can just tweak. It's almost like it's literally a model that you can tweak to, if you shift this lever or this lever or this lever, how will that change those three?
I'm a big fan of that, Will.
Yeah.
I'm a big fan. Not everybody wants to do it themselves, or even if you don't do it exactly 100% correct, you learn so much
Yes.
by tweaking, and also you also gain an appreciation for later on when somebody else has to build that model. And I also love building models where you just have a few key factors that can then you edit those, and then it'll roll through the entire model.
100%.
And I one of the main softwares that we use is QuickBooks Enterprise.
Mm,
QuickBooks Enterprise has come a long ways. We don't use QuickBooks Online.
mm,
Most of our clients, they outgrow it very quickly, and it's a whole thing. But the QuickBooks Enterprise allows us to have a long shelf life before they need to go to the next level, like a NetSuite or someone else. And so oftentimes when that pro forma or the forecast or the budget, whatever it is that you want to measure against, is finalized, we often will upload that into a QuickBooks Enterprise, any system actually, any accounting system, because now we can generate financials that are either profit and loss, actual versus budget, just for using for the example's sake,
mhm,
in the variance. You get the variance with the dollars, or you get the variance with the percentages.
mm,
You
mhm.
can collapse, you can expand, you can just see so much with that, whether it's for the month, for the quarter, for the year to date. Now, having that side by side comparison allows you to see, were we in line, close to budget, over, under, why? That's where the analysis comes in. And oftentimes, you make your business decisions based on the performance of the previous period, whether it's a month, quarter, or year to date.
Mhm.
And that's why you need to get those financials timely.
Yeah.
Because if you get in like, oh, we haven't gotten, it's another month, maybe you could have made an adjustment earlier in your ad spend, like you're saying, a marketing expense or some sort of promotional item that you were going to do. But a month later, I just feel it's too late. For you still can make the decisions, but you could have made it earlier.
Yeah.
And yeah.
Yeah. That's key. Okay. So coming back to the overall frame, which was bookkeeping, accounting, controller, CFO stuff, and then maybe and then and then maybe like tax preparation, the actual CPA level of things. So
Mhm,
at least
mhm,
that's the ontology in my brain, how to frame
mhm.
it for founders. Does your firm do all of that? Do you do the tax prep too, or no? You have CPA firms
W-
you recommend?
we work in tandem with the CPA firms. And so we don't do taxes, but we prepare everything that the CPA firm will need in order to prepare the taxes. And nowadays, we have all the what we call nexus. Basically, a lot of companies have employees in multiple states.
Yeah.
And so the CPA firm, we work with them to let them know, hey, we have a new hire, it's a new state, just so they know what are all the states that they're going to need to prepare tax returns for. And we go back to also the GAAP accounting.
Yeah.
If there is some event, especially in the Silicon Valley, which is where we're at, there's stock options. There is whether it's a stock grant or some sort of fundraising event, we need to work very closely with the CPA firm to
Yeah.
let them know what internally is happening on a day-to-day basis, so they can help us to plan and do some tax planning in order for us to then give them everything that they need for tax time. So yeah, we have some handful of CPA firms that we work very closely with. It's an ongoing relationship, and we also have to educate the client as what is the role that we play, because we're not saying that we are the tax CPA firm. We serve as your outsourced accounting department with the bookkeeping, accounting, controller, CFO, and then we work very closely with the CPA firm, because oftentimes either the CPA firm can offer all those other layers at a much higher premium price than the practice like ours that just kind of, that's all we do, is we're out and outsourced accounting department for the startup companies.
Awesome.
So
Awesome. Okay.
yeah.
I think we harked a lot on the books. Let's talk about the role of the controller. This may be, they grab somebody on the team. It's like, oh, you should pay so and so. You should pay so and so. Like, oh, how is it? What does it look like working with your firm in the function of a controller? What is that? Talk about. You mentioned it briefly earlier, but let's dive in a little bit further, because I think this is a key thing that also gets missed a lot in startups.
Sure. And the controller plays two different roles. The controller is kind of like making sure that the month end close is done correctly, that the controller is reviewing the financials for accuracy, timeliness. Is there anything that we missed? And
Mhm.
to ensure that we again being compliant with the rule book of GAAP. And not only that, but also keeping an eye on what are the things that the founders or the board of directors has requested for, that we keep an eye out, because ultimately we'll need to make sure that either we have accounted for that or
Yeah.
that we can explain why it didn't happen. So the controller is definitely on a daily basis managing the team, answering questions, providing guidance um, according to the rule book, and ensuring that everything's being done timely. But on the other hand, that controller is also introducing and ensuring best practices. And best practices is part of like ensuring that we have onboarded an employee so that we have all the correct information for their payroll or commission, uh, bonuses, to ensure that we have things that are triggers for we should be asking or requesting. I'm going to give you, I just thought of an example, and this just happened a couple of weeks ago, but we have a company that is going to have an event that we say it's not an exit strategy, but they're going to be raising certain funds through a convertible note round. Convertible notes, just not public, right? It's for a private company.
Mhm.
Well, there's a due diligence that comes with that. And the controller, is ensuring that all the records are in the right place, that all the revenue, and when I say due diligence, it's basically a long list of requirements that we're going to need to provide
Yeah.
the firm that's looking to invest, in order to sort of like validate that the company is who they are, that they're doing what they say they're doing. And so the controller puts best practices in place along with the founders from the very beginning, to ensure that we have the signed contracts, for whether it's an employee offer letter or a customer or a client contract, that we have the vendor contracts. Basically, that the best practices, we start to put them in place from the very beginning, because when the due diligence or that event comes up, we're not scrambling, and the founders are not having to pay all these additional fees because of all the extra work that we are now doing. We incorporated, the controller incorporates it, implements it, follows through on it, from on a, whether it's a daily, weekly, monthly, quarterly basis, just to ensure that when the event happens, it's normal. We got it. You'll have it by tomorrow, or we can get that to you in a couple of days, as opposed to a scramble, overtime, working long hours, and feeling like we're going to miss something because now we're rushed. So the controller plays that dual role. It's the best practices, implementation, follow through, and managing according to the rule book.
Now, will your firm also run payroll and do the payables? Is that how would you put
Yeah.
that in the office of the controller, or how do you, or do you have an ARAP clerk that you like? How do you think about it? How do you advise the founders?
So oftentimes we speak to founders about what are their needs, what are the challenges, what's coming up, and believe it or not, a lot of them will already know where they want to be in 2 to 3 years.
Yeah,
And I say 2 to 3 years, 5 years is way too long.
way too
The
long.
vision is shorter, right? And so I'm going to give you the example of maybe a company who knows that they're going to want to have an exit strategy within 3 years of when they started the business. So for us, we're able to really look at that and say, okay, if they're going to have an exit strategy, or at least try to sell, or whatever other event, let's just go with the sale. We can work backwards, because we'll know that we need to implement good practices,
Yeah,
so that when the sale happens, it's like a plug and play, such an easy transition, because everything has been done from the beginning. Well, so let's say the client hires my firm. The bookkeeper is managing the day to day, but there's always, we use Asana as our project management system.
mhm,
There is a very lengthy monthly um, checklist, that includes everything from checking email to entering the bills, saving the bills, processing the check run, all the checks and balances that are necessary. When there's an exit event, there's a due diligence checklist that you have to answer. And part of that is the segregation of responsibilities. And so many founders are not aware of that.
yeah,
Is when you have that exit strategy, you have to show that the same person who's entering the vendor bill can't be the same person who is also cutting the check and doing the bank reconciliation and running the financials, because there's a lot of exposure. And so my firm, we have the different layers. It's like, yeah, we have the bookkeeper who does the payables and the receivables. And we have somebody more experienced who processes payroll, because payroll is complex when there's a lot of multiple steps, or let's say you have garnishments or levies, or all the different complexities that come with the
Mhm.
payroll. But then you have where the accountant comes in, is that accountant plays the role of, they're not doing day-to-day transactions, they are reconciling the accounts, they're reconciling the bank accounts, they're reconciling other accounts and transactions and activity. So there's also another set of eyes looking at the activity and questioning it. I'm famous for doing that, and I'll just look at something very quickly. It's just from years of experience, and I'll
Mhm.
just go and ask for things. And I'm not saying you did it wrong, you did it wrong. I just want to know, hey, what is this? It's not obvious. And that's how we also improve better descriptions and a stronger audit trail. I'm constantly saying audit trail, and an audit trail is as simple as put in the memo transaction where the supporting documentation is for that loan, let's say, and
Mhm.
that we have that loan saved somewhere. And so for our firm, yeah, they would get a bookkeeper who's handling the payables and the receivables, and someone more experienced for the payroll. But they're not interacting with all these different people. Usually when they interact, we have one centralized email account that many of us have access to, but we have subfolders on the side that we know it just works. Everybody can see everything. We all have access to it. And let's say when the exit event happens, we hand over that email account, we hand over the G drive, the box drive, the Dropbox, the accounting file, and it's seamless. It's as if we were never there. And sometimes we even hand over trainings and videos. We're very big on desktop,
Oh yeah.
creating those Loom videos for
Yeah.
explanations as well as training. And so, yeah, they either grow with us. Sometimes we do have to say, oh, we are not part of the sale. So,
Right. I know. As you're saying, I've been through so much M&A and complex funding rounds where to be able to hand over to the people doing diligence what you just described in the data room, so it's all nice and neat and tidy.
hmm hmm
Oh, that saves
hmm
so much time and money. People, this is
hmm
very important. Pay
hmm
very close attention to everything she's saying.
Will, you just used the word data room. Why don't you share with us what data room is? Which I love those data rooms, and we
Oh
build them
yes.
out. We build them on up as we go as well.
Yes. So when I'm investing in a company, and or if I'm helping somebody do an M&A transaction, the data room has basically everything you can think of in it that would allow me to do proper amount of diligence. And obviously the finance folder is critical, that all the books and all the audit trail things that she just described is there. And for me to not have to constantly go and ask, oh, what about this, what about this, what about this, it saves so much time. Like even the
hmm
last few months, we've done 6, 7 deals. 3 or 4 of those actually had beautiful data rooms that allowed us to not have to ask a bunch of questions. Like we
hmm
just moved
hmm
wrote the check really fast because the data room was super, super tight, which was
hmm
great to see. Which is not common.
I mean, I love that the data rooms for us, because we're in this world of startups. We know that it's not a matter of when. It's not a matter of if, it's when.
Yeah.
You will be asked for, give us a folder of all your contracts, give
Hmm.
us a folder of all your employee offer letters, give us, it's just those things. So what we do is, as new hires come on, let's say, or a new contract is signed, it's an automatic, it gets into their individual folder, but then it goes into an all folder, like in all contracts, all employees. It's just, we've been there, done that again. And it's painful if you don't do it as you go.
Now, one thing you mentioned earlier, which is the different people and the controls. When you're starting out, there's a lot of non-compliance happening because most
hmm
people aren't aware.
hmm
What's the, hey, you need to be compliant for these basic controls, even when you're starting out as a company?
Like, do you mean what, like when is that time, or what do
Like
they?
specifically around who can access bank accounts, who writes checks, who does
Yeah.
there's,
Yeah, that is just such a common thing. It's just, especially when you're so busy building the business for a founder or the co-founders, they're just so busy having all these meetings and raising money and answering all the questions and recruiting, that they're just so happy to be like, okay, here you go, you do it. And so we say, no, no, no. So we have what the recommendation I have is most banks nowadays have online banking, and you can have different roles. And a role for somebody like us, we'll go in, we can look at the bank accounts, we can actually move money within the accounts, but we can't, there's checks and balances. Like we'll set up maybe payables. We use Silicon Valley Bank quite often with our clients. We'll set up payables within there, but then one of the founders or the founder or the CEO has to go in and release the payments. So we say, don't give everybody all the control. It's not a good idea. You should have, even if it's a pain, like we educate our founders as well. It's like, listen, we know you don't want to be reviewing and approving payroll, but right now we're setting up the new hire. We're processing the payroll. Somebody else should be at least reviewing. We can still hit the button and process it, but we need a signature. We need that check and balance. And oftentimes we've had to introduce that level of authorization or review and authorization process when they felt like it wasn't needed. Like, why is it necessary? And we constantly have to say to them, this is going to be really important when you go to have your exit strategy and somebody's asking you who does what. If you don't show that segregation of responsibility, it's just to keep you compliant, keep you safe. It's to keep you out of trouble. And sometimes it's as easy as just giving not a verbal approval. Everything has to be, whether we use DocuSign a lot for the electronic signatures, or we have a process to get their approval and authorization. And again, we standardize. We use so many email templates or other ways of electronic approval, but they're used to it now. Once you standardize it and it's the same thing every week or every month, it's easy. It takes seconds, as opposed to they're thinking it's a big burden of like, oh, I got to distract myself from this to approve payroll or approve the payables. Yeah, you do, because one person should not have access. It exposes you to, I hate to use the word fraud, but there's a lot of things that could, not just fraud, but things that could go wrong, could be missed. We just had a situation where a commission wasn't paid out in a timely manner and the process wasn't followed. So we're like, we don't have a paper trail. We don't have the employee change form. We don't have, so it was sort of like maybe the person thought that they did it, or they thought this was enough, but not following the protocol or the process. That can delay, or, you miss things. So it's not always just about fraud. It's about making sure that we're following the rules for later.
Yeah, that's good. Okay, this is good. I like this. So we've covered controls, we've covered bookkeeping, we've covered the importance of having your books in place quickly at the beginning of the month with the financial modeling. Let's cover a little bit more of the CFO stuff, the accounting and CFO. Because a lot of people will hire a fractional CFO. They'll, again, thinking individual, but I like the firm approach. What is the approach that you all bring when it comes to helping teams architect their financial plan? Like, what's the fractional CFO type work that you do?
I would start with what we call an intake form. It's a conversation of asking, why are you looking for this role? What are you hoping to gain? Like, what kind of support do you need? Oftentimes it's a request by the board of directors or the CEO, where they feel like they're not getting the information that they need in order to either, maybe there's a fundraising round coming up and they need a certain level of metrics or historical data plus the future, right? The pro forma. And so the CFO role it could be strategic in terms of helping you plan and helping you to guide as to how do you translate the vision, the goal that the board or the investors and the CEO has into actual numbers. Like, for example, one of the exercises that I just did recently was they wanted to know capacity. At what point do you hire the next software engineer or the next business development person in order to be able to scale, to continue to grow? And these are terms that in our world, we know, we hear often, but the audience I hope they understand it as well. But it's like, you can't, oftentimes, because cash is king and you want to preserve this cash as long as possible before you have to go out and raise funding or before you hit your goals of revenue, you have to think about capacity. there's only so much systems can do. You still need human beings to do certain things, and you have to understand, okay, at what point do you hire that person that makes sense? What's the break even point? And so a CFO is that person that I often refer to us as translators of vision, translators of goals, translators of history, and future, because we have to hear what the people, the board of directors or the CEO, what they want to do, whether it's build a new facility and move everybody over, or they want to have an exit strategy with this much valuation. And we start with the end in mind. What is it that you think you need? And I say that between us,
Yeah.
between you and I, Will,
Right, right,
I'm
right.
saying, what is it that you think you need? And then we have to deliver what it is that they apps actually need. And what they actually need is, some guidance, um, if then, meaning if this then that, more than one scenario to choose from, because oftentimes by giving them an option, if we go down this road, if we go down this road or this road, we come up with a hybrid of all three, or however many options you're referring. But it is a relationship, with your, whether it's a fractional interim CFO. I often play that role myself. It's to help them also hire the right person for the team and for the investors. And boy, what is that saying? Hire slow, fire fast.
Right,
I
right,
think that, yeah, there's times when it takes us a really, really long time to hire the right person. And even then, you just don't know, and it ends up being the wrong person. And by that I mean, sometimes they're so high level that they don't know how to translate the details into that high level. And
Mm,
so the CFO really needs to be that person who is able to speak to the CEO and execute, support the board of directors as well with whatever they need to see. Oftentimes they want high level, they want key metrics, they want, the performance, and they want to know what is what I call the watch outs, what to watch out for, the gotchas, and to prepare for. And the one thing that I can think of recently is sounding the bell for the cash. We're going to run out of cash in 6 months. You cannot wait until
right.
3-4 months from now to go raise money, because it takes this much
Yes.
time to raise money.
Yeah.
And so it becomes, you're an educator, you're a projector, you're a little bit of a therapist, but you're also, you're right there. You become this right hand person for them to be the voice of reason,
Yeah.
and also not take it personally when they decide to do their own thing, and then later they get in trouble, and they, if you're especially like someone like me, they call you back. I'm like, you didn't listen. But the CFO's role for oftentimes is like a guide. Um, yeah, and that person who becomes a guide and a very strong strategic partner in whatever capacity, part-time, fractional, interim, or long-term.
This is really good. Okay, so the last thing then in my little mental framework here would become tax prep time. What are the things that founders should just make sure, if you've hired a firm or you've hired some individuals from this conversation, hire the
Hmm.
firm.
Hmm.
Um, what are the things that they should be looking for to make sure that to make sure that their finance professionals are doing the proper things for tax prep time to get it over to the CPAs?
A couple of different things, making sure that, high level, that what they believe their revenue was is actually there, making sure that things that they know they weren't quite sure how to treat, but that are reflected somewhere. And what I mean by that, I'm going to give you an example of, oftentimes early stage startups have an R&D credit, research and development credit, and
Hmm.
that's not often reflected on the balance sheet. We just did something similar where in the previous year it was not reported correctly, and so we need to make sure that the founder should look out for things like research and development credits, um, payroll liabilities, meaning was there something that was owed as of 12/31/20, the previous year, but it wasn't paid out until the following year. You don't want to miss out on any kind of tax um, uh, benefit.
Mm,
And oftentimes, you think, oh, well, we recorded all the cash transactions, we recorded the bills, we're done. No, you need to think about what got paid in the January period that was actually for December. They need to be thinking about in a accrual accounting, meaning was there a service or a product that you purchased but you didn't get the bill until after
mm.
the books were closed, and those you need to like we go back to accrual or GAAP accounting, you need to expense those. It's an estimate. You would miss out on that benefit. Account reconciliations, making sure that all your cash, credit cards are reconciled. We go as far as we reconcile other accounts on the balance sheet. Prepaid expenses, again, is the treatment of those expenses that maybe you bought something that you're going to use in the current year, 2022, but you bought it in 2021. How is that being recorded? So it's just asking questions of your financials. Is everything that was supposed to be recorded in the books reflected in the books? Do we have anything that we paid in the following month that really should have belonged in the tax year financials? Did we commit to anything that we need to record? It's just basically asking more questions of your finance team, or your finance team or your financials should already reflect it, and your finance team should already be telling you. We're proactive, so we have a year-end checklist that we go through, and then we just sort of give an update recap of what's on the financials. But that's part of our financial package as well. We deliver financials as well as a high-level summary analysis that just tells them how many employees, at the end of the month or year to date, how did the cash perform? Just a lot of different things, walking them through the balance sheet, walking them through the profit and loss statement, profit margin, but also the employee stuff. The employee stuff doesn't always get reflected. That's one thing that we noticed, that sometimes payroll taxes that are due in the following year, but they're for the tax year, they're not reflected. So ask questions. It's okay. They shouldn't take it personally. It's just, you don't know.
Now, do you do the classic early November strategy meeting, tax strategy meeting with the CPAs? Or how do you advise groups to work with the CPAs in your firm in order to outline the best possible strategy for tax that year?
Great question. So that it just doesn't happen enough. So because we know the drill, we do reach out to I had a strategy call with a CPA firm, and it required 3 different divisions with this one particular client. I'm going to use them as an example. And it was right before Christmas, because we couldn't make it happen any earlier, and everybody wanted to go on the holiday, right? So, but it was a Zoom call in which we talked about the strategy for the corporate tax returns. When do we want to have it done, so we could work backwards, because we needed to also work with our R&D firm to calculate the annual R&D credit that goes into the tax return. And then talking about where in the San Francisco has this nice little thing called gross revenue. So that needs to, property taxes, right? The sales tax returns. And so we need to plan for all of that. And even though we're not going to be scrambling, because we've been taking care of the books, closing the books in a timely manner, there's still some things that need to be prepared for the CPAs to do their different things, whether it's the sales tax or corporate tax returns by state. And so we did have that preliminary strategy call, because then that CPA firm, as well as in this case, my firm, we prepare what we call engagement letters. Engagement letters are things that are out. For my firm in particular, we have a monthly retainer. Here's the services that we perform every month. But there's that engagement letter, as we support the CPA firm, we have to let them know, here are all the things that we're going to be doing in this time frame to meet the deadlines. And these are the services outside of the scope of work, and this is the fees that you can expect. And the CPA firm does exactly the same. So that's why we say we work in tandem. Right. At the same time, we're working to support them, and they're working to also meet those ever-changing deadlines for tax returns.
For those listening in, watching, I would highly recommend you do that meeting before Thanksgiving.
Yes.
If you can have that meeting, that way you're not super rushed. I mean, it's always the end of the year dealing with making sure that, because there's just a bunch of stuff you got to get in place before December 31st, or otherwise can't retroactively do it.
I agree, Will. If you can do it sooner, I have a few others where we did it in October. But we're constantly speaking to them, especially because as new hires come on, there's another state. So we're constantly in communication with the CPA firm, my firm with the CPA firm, not necessarily with the clients. Oftentimes it depends on what level my clients are at. I will meet with them on a weekly basis. They get an update, and it's a quick 15-20 minute check-in, just for us to update them or get some I ask questions and get answers, or for them to ask us questions and get answers. And because we all know that we're going to see each other on that weekly basis, there's not a lot of uncertainty. There's not a lot of miscommunication because we meet on a weekly basis.
Good, good. All right. Bonus question. What are the types of things that you flagged to the tax accountants? You're like, oh, no, I'm not dealing with that. I'm pulling in an accountant. Like, what are the types of things that you're like, you know what, we really need to bring in legal?
Um, Revenue recognition.
Mm,
That's the top one.
mm,
The in the last few years, the SEC has introduced a lot of different ways to recognize revenue. Depends on the type of revenue. There's so many rules around that right now that I feel like I am not the expert. I know enough to flag it. I know
mm,
enough to then bring in the experts. And then the other side to that is stock options or stock transactions. So that's when it's like, let's bring in the legal team who drafted that stock option plan and the accountants to also help us to, do we need to record any transactions on the financials to be, again, be compliant, follow the rules. Those two areas are the top two areas that come up over and over again. And I don't pretend, none of my team members, we are not experts in, it's all these ASC 606, 608, 808. We're just not experts in that, but we know enough. We get guidance, we ask for the guidance, we can provide the contract, or we don't like to just say, what do you think? We say, here's how we're thinking about it, here's what we think we should do. And then that saves time. Again, our rates are different than the CPA firms. So we like to already let them know, we reviewed this, here's how we think we should do it,
yeah,
and then give it to them. So
yeah,
revenue recognition, and then the stock option
yeah.
transactions.
Now, you keep saying stock options. Obviously, there's a big controversy, stock options versus RSUs. I'm seeing a lot of people move to RSUs. Are you the firm to talk to about options versus RSUs, restricted stock units? Is
No,
your the firm to talk about that strategy difference?
no, I think that's illegal.
That's legal.
Illegal with a CPA firm because there's tax complications
Yeah.
to each. And like I said, we know enough. We use Carta
Hmm.
most often with for the stock option administration, and they do a great job. But we know the basics, we know the baseline, and we know what questions to at the very least ask, and then we can translate for the founders and just sort of like facilitate the conversation. We will attend those meetings because we need to make sure that we understand what needs to be done, but we are not the firm to speak to give guidance and strategy about it.
Got it. Okay, good.
Yeah.
We covered a ton. This is amazing.
Woo!
All right. How now? Being a part of a ton of deals, you have sold me. In other words, if I'm doing deals and similar to what we've alluded to earlier, if they don't have a firm like yours, if they don't have that tidy data room with all those documents, so I don't have to ask question after question after question, because I've been
Mhm.
hired to do diligence for a bunch of people doing these deals as well, then it's concerning. So I have a high degree of confidence, especially as a VC, if it's working with a group like yours with a deal rather than somebody hacking it together themselves. So this is beautiful. Where can people find you, your firm? What is the right time to talk to you? Let's talk about that.
Thank you for the opportunity to talk. Let me talk about my firm. It's Fortified Accounting, and that is go to our website, and there is a button all over the place. It says book a discovery call, and that's what it is. A discovery call is just basically a conversation so that you can ask questions and we can get to know each other and see if there is an opportunity for us to support you, or to even if you even need someone, because sometimes you don't need us and I refer you to someone else. And
Mm,
so that's a great time. But on my website, Fortified Accounting, if you book that discovery call, usually it's Monday afternoons that I take
mm,
those calls.
mhm, mhm.
And it's just I connect with some great people, and again, it becomes a referral. But more often than not, they don't even know what they need, so it requires a follow-up conversation. But I'm also on LinkedIn, so connect with me, Veronica Sagastume on LinkedIn. Find me there. I love connecting with people, and I sometimes you get an audio message from me if you reach out, or a
Mhm.
video. So
Nice.
I
I love
respond to
that.
every single one. I still do that. So
Love it. Yeah,
yeah.
no, as you said at the beginning, the Loom video, like the smart use of Loom videos, that elevates productivity big time.
Absolutely. And during the pandemic, or when March 16th, 2020, um, I've been virtual for years.
Mhm.
And so some of my clients were not, they're very much like coming to the office and that kind of thing. I ended up recording so many Loom videos to show people how to set up, how to do, there's everything from the desktop to actually filming myself with the lights or the web or Slack channel. And I didn't charge anything. I was just like getting everybody. So it's like, here's how you're going to manage the team. It's all going to be okay for the following 2 weeks. I just did that nonstop. And I should be at, Loom saved the day. My clients didn't even know about Loom. I've got CEOs all over the place using Loom.
Totally.
Okay.
Oh yeah, big time. It's so key.
Exactly. Exactly.
All
Well,
right,
hey,
yeah. Sorry, go ahead.
Will, I was just going to ask you, Will, what is your business? What does your company do? Because oftentimes you ask us, I've listened to your podcast and you never get the chance to
That's
talk
true.
about you.
Well, I
So,
appreciate that. Yeah, that's true. Actually, I rarely talk about what I do. So I sold my first two companies in the 2000s, put me in a position to start investing, mainly in the Seattle scene, but then I moved to Chicago in 2014. While I was investing, I was also building companies on the side. I'm just an entrepreneurs. I just love building
mhm,
things, especially from the ground up, from the idea stage. And I saw a gap in the market in venture capital and venture building in the idea stage, friends and family pre-seed realm, because
mhm.
so many VCs and so many angels will do that word traction that we talked about earlier. They'll say, "Come back to us when you have more traction." I was like, well, this is when most companies die. This is where all the activity is. It's a huge market. Why aren't there more firms that serve the sort of
Mhm.
pre-idea to pre-seed journey? So we started a firm that we have a labs division where we're building lots of companies. We have a services division that services our portfolio and services the enterprises that we work with. And then, yes, we have a venture capital wing with 4 different mechanisms of investing capital into the groups that come through our studios and come through our labs division. And so we'll just have conversation after conversation with idea stage founders.
Excellent.
How do you architect your team? How do you, like, this is the conversation I'm going to be sending everybody to, because they need to understand all of these nuances. At least this is the roadmap, right? We should
Mhm.
assume they're going to get all their traction and numbers up and to the right. And as they go through those subsequent funding rounds and have to open up those data rooms, these are all the things that everybody needs to know.
Exactly. Exactly. That's so interesting. And it's great that you're filling that market because you're right. The from idea to pre-seed, and it's like that's when they need the money to
That's
to
right.
get the proof of concept, to get to that area where it's going to be valuable. And I see it so often where it's like we couldn't make it happen, we couldn't raise enough, or it just didn't happen, we couldn't get any funding. Oh, so
Yeah.
great,
I mean,
great, great.
our purpose statement is to promote human flourishing by investing holistically in
Hmm.
entrepreneurs, because they need the money, but they also just need this conversation.
Yes,
They need this
yes.
learning. They need to hire you and your firm, Fortified Accounting. I'll put all the links in the show notes.
Thank you.
They need to understand the nuances of sales funnels and B2B sales, complex B2B sales if they're B2B. They need to figure out
Hmm.
growth marketing and all. There's just an infinite number of things that most founders sort of do the fake it till you make it. But it's
Hmm.
the things you don't know. It's the questions you don't know to ask, where
Exactly.
working with a group like ours called Proto Ventures allows us to
Mm.
bring a whole network of people around a founder and the
Hmm.
money, so that
Hmm.
all the talent and the money is there as we help that founder build out their co-founder team, build out their dedicated team, so that they incubate out. And then it's a bunch of our companies have gotten into all the accelerators and
Oh, that's
raised a bunch
amazing.
of money and exited.
Exactly.
So yeah, we've seen
It's the
the lessons.
community and support. That's what you're providing them with as well. The community and support that they often need when it's so, you could feel so alone and overwhelmed.
Totally,
Oh my gosh, great.
totally.
So
Well,
thanks for sharing.
yeah, well, thanks
That
for
was fun.
asking. I think you're literally the first guest that's ever allowed me to plug my own firm.
Awesome.
So, are you also active on the socials or the links I can put there, or is
I,
LinkedIn the best place?
I'm primarily on LinkedIn for this because I feel like my uh, as I say, our ideal clients, right? Our ideal client avatar, our ideal clients are on LinkedIn, but it's usually also just through podcasts or, the referrals. It's a long network. It's a many years in this business. So I like the repeat. Like right now, I have one of my clients. We've done 3 other businesses since 2012, 3 companies. So he just keeps coming back and brings over his co-founders.
Well, when you find someone good, you don't leave. So that's
yeah, it's a great compliment.
that's amazing.
We feel very lucky.
And just to be clear, the right time to talk to you is when you have a sufficient amount of funding that you're rocking and rolling, or do you even want to talk to people early enough so that maybe you can connect them to a group like ours so we can fund and that they can turn around
absolutely
and work with you.
You know, and that's the thing. It's why I say, like, book a discovery call. It's free. It's 20 minutes. It's just a conversation.
Yeah.
Because oftentimes you may not be at that right time for us, but we can give you, we love teaching. We love sharing. We love, like, we're like the match.com, we love to put people together, because if you're not at the right stage for us, because it does cost money to hire us, and you may feel like it's too early on, we do refer you to another company, or what's a better fit until you outgrow them. Oftentimes I'm asked, like, what's the difference between you and pilot.com? It's not it's not the same, it's like I have to spend time doing that. But there's some, I did refer one of the companies to pilot.com because of what they needed was so early that and then I said, when you get to this point, I did let them know, you're going to need to leave them and go to the next thing. So I would say at any time. Now, if you're like in the enterprise, you've been in business for 10 years, you've been, you're Series D, and we're not the right fit for you. You already should have your department, your internal department. Yeah. And that's why we say we focus on the early stage, like, from idea to 3 years. One of the co-founders that came to us was, he cashed out of his stock options and did really well and started his own business. And he's like, I'm not doing the VC side. I'm not going to do the convertible round or friends and family. I'm going to fund it myself. So when we say funded startups, it could be self-funded, but they need to have something in the bank where they're not going to be so stressed about investing in the business to actually grow it. So that's why
you're hiring the pros, and the pros are well worth it.
Exactly. We earn it. We earn our keep.
You earn your weight in gold for sure. Yeah, no, some of the best advice I got early on in my entrepreneurial career was find a good banker, a good insurance person, a really good finance accounting firm, and then a good law firm. And if you have those people in your court, you're unstoppable.
It is. That's your team right there. That is your team. So excellent.
Cool. Well, this has been amazing and very thorough. I really, really appreciate you carving out the time.
Thank you, Will. It was so much fun to talk about all this stuff that I find fun and is interesting and exciting. Sexy topics,
Yes. I love it. All right. Thank you. All right, a couple quick things before you go. Number 1, I have a general newsletter where I write about technology and startups and health science and teaching people to code. And I write about a variety of different subjects that we talk about on this show. So if you go to wclittle.com, there you'll be able to subscribe, and you'll also be able to subscribe to particular topics. If you're just interested in one or a few of them, you'll be notified right when I publish new content in those areas. Number 2, my partners and I at Proto Ventures have a portfolio company called Startup Rocket. If you go to startuprocket.com, there you'll be able to receive coaching guides and customize an operations framework for you and your team and your advisors to be on the same page in terms of what is the appropriate next step for you and your entrepreneurial journey. And finally, if you wouldn't mind leaving a review anywhere that you have listened to this podcast or watched this podcast, it would be super helpful to help those who might be interested in consuming this content as well. Thank you.